Europe's economy was not looking good. Last week we had huge market sell-offs on fears that the problems in Greece would spread to the other pigs of Portugal, and Spain, Italy, and Ireland, perhaps even to the United Kingdom and the rest of Europe. With that in mind, the EU, IMF, and even the US helping to kick in $1 trillion to help stop this potential debt crisis. But if you look at home, you have to really admit, even though there still are a lot of problems with the U.S. economy, it's getting better. We're seeing a recovery in corporate earnings, the job market's getting a little bit better, the housing market is stabilizing. Again, this is not to suggest that everyone should go out, party, and sing Happy Days Are Here again, but the U.S. is not Europe, and that's a good thing. What do you guys think? Not surprisingly, my loyal group of Eeyore-esque readers still see more clouds than sunshine for the U.S. economy, though. Mark Frohler wrote that lots of folks have been drinking the Kool-Aid. None of the fundamentals have changed. Housing still suffers, and prices are still falling in most markets. The end of the tax credit will pull that market back down again. 20 to 25 million are either unemployed or underemployed, and they're not getting their jobs back anytime soon. That's a pretty constant theme from readers. Still a lot of pessimism. I think that some people do need to stop reading their Illuminati conspiracy theories and get a grip. We've come a long way from the death spiral that everyone was worrying about in the fall of 2008. However, Tim Bachler takes the pessimistic view a little further. He worries that the U.S. may actually become the next Greece. We have an economy that is supported by the government. The money will soon run out. Bummer. I see how the people in Greece are reacting to their forced austerity measures. I wonder how the people are going to act in the U.S. when the reality sets in that our well is also dry, and we need to give up some of the things they thought they were entitled to get. Another theme that came up, many of the readers sharing that. I don't honestly think, though, that the U.S. debt concerns are nearly as dire as in Greece. None of the real experts out there are suggesting that the U.S. is going the way of Greece or some of the other European nations just yet. Finally, Steve Addy told me to keep wearing those nice rose-colored glasses. He says, I find it unlikely that the U.S. economy is on the mend. We make practically nothing, use taxpayer dollars to bail out unprofitable entities, GM Chrysler, and we have a government that only wants to inflate more bubbles to take the place of the failed housing bubble. Steve, how did you know? I've got these rose-colored glasses. I figured I'd put them on just for you. Seriously, though, I do agree to a certain extent that, yes, the Fed does risk inflating other bubbles by keeping rates as low as they are. But I don't think there is this cabal of economists led by Ben Bernanke sitting in a dark cave buried in a mountain chuckling maniacally about, what bubble can we blow up next so we can, doom the U.S. economy, but make some people rich just for a short period of time. Yes, the U.S. economy is not in good shape. We all know that, but slow, steady recovery is better than the painful recession that we hopefully are finally out of.